Hello, welcome. Happy, what day is this? Wednesday?
Mm-hmm.
Hello.
Hello.
Hey,
Hello.
Cora, I don't believe we've met before. Welcome.
Thank you.
Are you a real estate agent or are you an investor or tell us a little bit about yourself?
Oh, I thought it was about um, wanting to buy a home or home purchasing, so I probably got it wrong.
No, you got it right because you're in the
Oh,
right spot. So,
okay.
formally welcome. So, I am the president of the Metro East Realtors Collective, Dr. Duncan. That's my name. And then we actually have our other members of our chapter with us. We have Valerie Moulton. She is a agent broker with Hayward Husman, and we have our vice president. Valerie is our chaplain. Marsha Parks is our vice president of our chapter, and we're really excited to have you here because we want to provide an opportunity historically for the first time being able to focus on Black home ownership. And so everything that we're doing is really intentional towards that. We want to be able to collect those or connect those who are interested in buying a home, learning about the home buying process to our network, which consists of real estate professionals ranging from the agents, brokers, you have insurance professionals, business financing experts such as myself, as well as our bank and other lending entities. And so, yeah, thank you for coming on board. And if you don't mind sharing your information in the chat, one of us, if you're interested, can reach out to you for a follow-up.
Okay, I will. Thank you.
Yeah, absolutely. Thank you for joining on. And just out of curiosity, how were you able to find us our information about the actual webinar?
From I guess it's probably from Desiree Nelson, who
Oh,
is
okay,
part
cool.
of our St. Louis Ross community, and she
Okay.
put all the information in her email for us.
Oh, that's awesome. I appreciate that. So it's nice to see that we're making contact, and we will start having webinars more frequently, just to give people an opportunity to learn about the home buying process. We don't want you to feel pressure to make a move right away. We just want to let you know that you're in a safe space, and we will respect your boundaries. We are here to guide you from the initial aspects of home ownership, from just the preparing and planning stages, the saving stages, having the resources you need so we can see you from conception to reality. And so, if you don't mind for a second, Valerie, I'll start with you. If you just want to talk about what your background may be about, and then we'll go to Marcia and then Precious, because Precious is also one of the members of our organization.
Okay, thank you.
Yes,
Hello,
ma'am.
everyone. Hello, everyone. My name is Valerie Moulton. I am the chaplain for the Metro East Realtors Collective. I have been in real estate since 2011. I am currently a broker in both Missouri and Illinois, but I'm also licensed in California. And I work with all types of buyers. I love working with new buyers because I love seeking out funds to find them so that they can close on a home with very little down payment. Um, so that's my background, and I would love to work with you.
Thank you.
Absolutely. Marcia, is Marcia frozen? I think Marcia's frozen. Either that, or she can keep her head locked in
Yeah.
for a long period of time. Her freeze game is phenomenal. Precious.
Good afternoon, everyone. I can't speak. I'm sorry. I'm at an appointment,
Okay.
a doctor's appointment with my mom. So I
Oh, okay.
apologize.
No, that's okay. Hope everything works out with your mom, and it's good to see you again.
Thank you.
Yes, ma'am. All right. So, Brandon, if you don't mind, oh, I just saw the chat. I'm sorry. Um, Brandon, if you don't mind just giving yourself well, actually, I guess I can do the introduction. Um, So we're going to go ahead and get started with the webinar so it can be mindful of your time. And again, thank you for those who are participating live. And then we are actually going to have this saved. We'll share this. We're actually going to start a YouTube channel. So Brandon, you're going to have the first, not only do you have that awesome sign on Fallon, but you're going to be the first person to be on our YouTube channel, right? So
My claim to fame.
Your claim to fame. You're a pioneer and a trailblazer, right? So yeah. Without further ado, I want to introduce Brandon Bullock. He's actually FCB Banks is one of our sponsors, our original sponsors. Even prior to the charter, they have been committed to us from the beginning and have continued to be phenomenal in their support. Brandon is actually a member of our chapter, so Corey, like we had said earlier at the beginning about how relationships really matter and how we cultivate that for your experience. This is an example of how we go about doing it. So please be on the lookout for future webinars. Following us on the Facebook page, Metro East Realtors Collective, as we continue to provide, workshops, programming, in-person activity. We have a networking event coming up tomorrow. You're more than welcome to join. Tell your friends too who may be interested to meet as well, because we like to connect to the community. So without
Okay.
further ado, Brandon Bullock, FCB Banks, go ahead and take it away, sir, and just tell me when you want me to change the slides.
Okay. Yep. So my name is Brandon Bullock. I am the CRA Community Development Loan Officer with FCB. FCB is a local bank. We originated in 1901. We're family owned and have been for over 3 generations. We have 17 different locations, 14 of which are on the Illinois side, and then we have 3 locations in Missouri. So as a CRA lender, I do all types of loans. I do auto, residential, commercial, but my main priority is focusing on first-time home buyers, minorities, low to moderate income communities, and helping them access affordable loans, help them purchase property, and ultimately create generational wealth. So today we're kind of here to discuss the what to know before, prior to applying for a loan, the process, what to expect throughout the process, and the different things that we might run into that could cause potential issues later down the road. Next slide. All right, so when we are making our credit decisions, we typically look at 4 main areas. So the main being your credit, capital, capacity, and your collateral. So credit, that is the personal credit history, which is a record that indicates the character of a person regarding their financial obligations and contracts. So I'll pull your credit, I will review it, look at any open, closed, delinquent, past due credit lines that you may have that you may currently have open. As far as capital is the cash assets and income sources available towards down payment, fees that are associated with the loan, and the loan repayment. What we do, we look at what you have set aside for your down payment and closing costs. So how much will you have remaining after the down payment? Depending on the loan type and your credit profile, you may be required to have a certain amount set aside as reserves. So we will take that into consideration when making that credit decision. Capacity, which is your current and potential ability to repay the credit obligations and to maintain the home financially. So we look at your DTI, which is your debt to income ratio. That's composed of 3 different things. So you have your front end, your back end, and your housing ratio. Overall, we don't want that figure to exceed 50%. The front end is before the loan, then you have the back end, which is with the loan, and then your housing ratio, which is the amount that is allocated towards the housing payment itself. Lastly, we have the collateral, which is the value and the condition of the home. Typically, we'd order an appraisal to make sure that what you are offering and what you are paying for that home is actually worth what you're paying. All right, next slide. So there are 2 different main types of mortgage lenders. So you have your mortgage banker, loan officer, and direct lender. This is a financial institute such as a bank, a credit union, or specialized mortgage companies. The loans are originated at that financial institute. They could either be kept or they might be sold and transferred off to larger institutes for them to maintain the loan. Then you have your mortgage broker that acts as an agent or a middleman between the borrower and the lender, and they help to kind of facilitate the best match. So the broker does not make the loan. This route can cost more as far as fees and higher rates, but it is a good option if you're an applicant that has some credit challenges or an odd situation that might need a specific type of lender. Next slide. So then we have the different types of home loans. So the most typical, you have your conventional. With conventional, the down payment does range. So you could have a down payment as low as 3% if you're a first-time home buyer, or the typical 20% down. Then you have the government-backed loans, such as FHA, VA, and the USDA. VA and USDA are rural housing. Sometimes they can require no down payment. VA, that will depend on your allowance, what they allow you to purchase. And then you have your VA, which offers a low down payment at 3.5%. Then we also have in-house or portfolio loans, and these do vary depending on the financial institute that you are applying with. You can also have seller financed or for sale by owner. And then these different loan types could either be a fixed rate where the principal and interest rate does not vary throughout the loan, or it could be a balloon and adjustable rate that could change throughout the life of the loan depending on different economic factors. All right, so your payment structure. So the payment is broken down into different sections. So the main thing is your principal and interest. That is your loan amount based on the interest rate that you qualify for. Then you have your escrow, which is broken down into property taxes and insurance. And then if you are doing under 20% down, you might have your PMI. And if you're doing a FHA loan, that might require an MIP, which is then collected upfront. And then you also do have that PMI throughout the loan as well. Things that are not included in the payment, you have your homeowners or your condo association fees. And then it's also important to consider other payments outside of that typical monthly payment. So how much is your water going to be? How much is trash, sewer, lawn care? Those are things to keep in mind when applying for a loan, just to make sure that you're within your budget and you know exactly what you can manage. All right, so now we have the items that will be collected for the loan. So we have your loan application, which we'll complete up front. This just contains any personal information, date of birth, name, social, marital status, income, any assets that you might have, such as bank accounts, retirement accounts, and then any debts. So we'll pull your credit score and include those debts or those liabilities in that application as well. We'll have you sign a certification and authorization, which is I call it a certain auth. And this just allows whoever to release information on your behalf, whether that be if I need to do a verification of rents to make sure that your rent has been paid on time, if I need to contact your insurance to have things updated, or to just do a verification of employment so that your employer can release information about your monthly salary and things like that. As far as employment history, we do require at least a 2-year work history to make sure that you have had and will have stable employment throughout the life of the loan. And then we do require proof of income. So that could be your pay stubs. So we'll at least collect 30 to 45 days of those pay stubs and use that to calculate your monthly income. We'll also collect your residential history. So that will be where you've lived in the last 2 years, whether you're renting or owning a home. We may also require federal tax returns the past 2 years. If you're self-employed, we definitely will need those tax returns to verify your self-employed income. We'll need any W-2s or 1099s just to show that income. We also will need bank statements, retirement and investment account statements, or any other statements for assets that you have that could potentially be used towards the down payment and closing costs for the loan. And then we'll also go through and verify any undisclosed debt, which could be child support, maintenance payments, alimony, or if you're past due on taxes, we may need documentation about those as well. So let's see. All right, so now you've met with the lender, you've completed the application, you've had your credit pulled, you've been working with an agent, you found a house that you love, you put an offer in, and it's been accepted. So now it's time to get the real work going in. So you will provide, or your agent will provide the sales contract to the lender. That way they know all the details of the loan. So they will know any commissions that'll be paid to the realtor, the amount of earnest money or the down payment that you put down on the home, anything that is going to stay with the home that is included in the sale, or any repairs that you guys have agreed to do before closing, or any of the seller credits that can be applied to the closing costs. Next, once we have that sales contract, we will give you a loan estimate. So that loan estimate is a breakdown of the crucial details associated with the loan, an estimated interest rate, an estimated monthly payment, and an idea of what the total closing costs could be. Similar to that loan estimate, once we get a little bit further down the road into the underwriting process, we will provide you with a closing disclosure, and that closing disclosure will have the final down payment amount, closing costs, the monthly payment, and any funds that you will need to bring to the closing table with you. Throughout that process, you will have a home appraisal done. Like I said, we'll have that appraisal done just to make sure that you're actually getting what you pay for. Typically, that appraisal is based off of any of the sales of similar homes that have recently sold in the area. And you are also able to do inspections on the property, whether that is an ASHI inspection, sewer, termite, radon, and occupancy. It is very important. They're not required by some lenders, but for you, it is important to have some of these inspections done just so you know what to expect when you're moving into the house, if there's anything that you need to address up front, or if there's anything that could be an issue later down the line. That inspection will give you an idea of what to anticipate. We'll also pull a flood certification, and this just shows whether the property is in a flood zone. If it is in a flood zone, flood insurance is required on any loan. And then we will also collect your homeowner's insurance, which secures you, the bank, as well as your property for any damages that could be done to the home in the future. We will also order title work, and the title work is the process of examining public records to ensure that a seller legally owns a property and that it's free and clear of any liens, encumbrances, and that there are no ownership disputes, just so that you make sure that you have clear title when you do go to purchase that property. All right, so the mortgage process can require several check-ins for bank statements, which will identify any new buy now, pay later, and other income sources. Lenders could request that all payments scheduled are paid off or included in your debt to income ratio. So it is very important to remember not to make any large payments once you've started the application process. And if you have any funds that are coming into your account, that you were able to provide documented source of where those funds came from. Any repeat deposits need to be explained and potentially documented to ensure that they're coming from a viable source. Lenders may consider this debt when underwriting your loan. At the time of application, the lender will request copies of your bank statements, which will identify your buy now, pay later agreements, since they are primarily set for auto withdrawal. And these could and potentially will affect your debt to income ratio and the amount that you're able to qualify for. So when it comes to bank statements, it is important that you are getting fully rendered bank statements from your financial institute. These bank statements need to include identifying information such as your name, address, the account number, and if there are page numbers at the bottom of that bank statement, it is important to include all the pages just so that we're able to verify that there is not anything missing or things that are trying to be hid throughout the application process. Screenshots are not acceptable for loans because they do lack that authenticity and are easily manipulated and rarely meet the standards required for lenders. They often fail to show account ownership information and cannot prove the origin of the funds, unlike the official PDF that you would get from your financial institute. Unlike or underwriting is like putting together a puzzle where the picture is a clear understanding of the borrower's financial risk. And this is formed by assembling supporting documents, reports, and history of any accounts that you may have. Without this identifying information on these statements and the pieces that we're collecting, the pieces don't fit together. All right, so while going through the bank statements, we will look at any deposits or withdrawals of, let's see. So some of the things that we will look at are any payments that are made to Affirm, Klarna, Afterpay, Zip, Sezzle. These are the main companies that you could use for the buy now, pay later. And then we will also look at any Cash App, Venmo, Zelle, or PayPal deposits or withdrawals that are being pulled from your account. So with these buy now, pay later agreements, the payments are typically scheduled over 2 to 4 weeks, and the payments can be spread over 4 to 6 equal payments. With these, there are typically no credit checks, and they're often advertised as interest-free. And these buy now, pay later apps can increase your housing ratio or your debt to income ratio by adding short-term installment payments to your monthly debt obligation. Lenders will view these as reoccurring, high risk, or hidden debts. And by having multiple buy now, pay later payments, this can significantly reduce your borrowing power. So let's say you have a monthly income of $6,000. Right now, you have a car loan that is $500 a month, but you've used Affirm, Afterpay, or Klarna to purchase like a new fridge, some clothes, a computer, or some furniture. So let's say the buy now, pay later, the total that you've added up is $500 a month. So that then reduces the amount that you're able to qualify for your home by $500, which reduces the potential mortgage payment and lowers the maximum house that you are able to afford. All right, so then there are a couple different basic types of credit. So you have your installment or your closed end, your revolving, your non-installment, and then also alternative sources of credit. So installment is anything that you have a set payment schedule on. That could be an auto loan, student loans are included in an installment. Then you have your revolving, which could be an open line of credit or any credit cards. You have your non-installment loans and your alternate source of credit, which is like utilities and rent. Sometimes we're able to use these utility and rent payments to create a credit profile for those who don't have standard credit lines that are open. So as far as credit scores, so what is a FICO credit score? A FICO score is your credit rating, and these range from 300 to 850. The higher the credit score, the better. A lot of people like to use Credit Karma to try and get an idea of what your credit score is around. Credit Karma is not a very reliable source. It's not true or very accurate to what your actual credit score is. Why does credit matter? You're more likely to be able to borrow when needed, the better your credit history. You also may be eligible for a lower interest rate or better borrowing terms. And your credit history can impact other areas of your life, such as getting a job, renting a place, utility deposits, and insurance, and other things. Missed payments can show up on your credit report for up to 7 years. So it is very important to make sure that you are paying any credit obligations on time before they hit that 30-day late. So building and managing your credit scores are based on a few important components. So you have your payment history, the amount owed, the length of your credit history, new credit or closed credit, types of credit in use, and public record and collections. It is important to keep and build a good credit score. Make sure that you're paying your bills on time, keep your debt to a minimum, Do not open any new accounts that are not needed, and make sure you're taking advantage of time, because the longer credit history, it'll generally increase your score as long as those payments have been made on time. It is important to build credit slowly and responsibly. By taking out too much credit at once, it could dramatically drop your credit score. So there are a couple of factors that do affect your credit score, such as credit utilization. Typically, we like to see at least 30% of your 30% or less of your credit line used. So the lower amount that you have on your credit card, the better. Your payment history, this represents how many of your bill payments have been made on time. The closer this is to 100%, the better your credit score will be. A huge factor is derogatory marks. So this could be any accounts that are currently in collection, any bankruptcies, civil judgments or liens, and these could significantly damage your credit score. The length of credit, like we just talked about, when it comes to credit history, the past predicts the future. So having a lengthy credit history and on-time bill payment shows that you'll probably be able to continue as a responsible borrower. Credit inquiries, it is important that you're not, when you're applying for a loan, you're not applying at multiple places, because this just shows that, you're kind of desperate for credit. You're taking a bunch of hits to your credit rather than, being responsible and making sure that you know what is needed before applying for that credit. Total accounts, it is similar to the length of your credit history. The more accounts that you have in good standing, the better. And of course, that doesn't mean that you should open more accounts just for the sake of it, Let's see. So I did include a link for a debt repayment calculator if you wanted to play around with that. Now, there are also cash assistance programs or down payment and closing cost assistance, such as grants, that can assist with the purchase of a property. We have the FHLB, which is a Federal Home Loan Bank. They offer DPP, which is one of the programs that we offer in-house. It's a $10,000 grant towards low to moderate income borrowers. There's also St. Louis City, St. Louis County, and other municipalities that offer local grants. The Missouri Housing Development Commission, they offer grants as well. And then you have your VA, which qualified for the 100% lending or the 0% down. We have IDA, which is the Illinois Development of Housing Authority. They have a couple different programs varying from $6,000 to $15,000 that can be used towards down payment and closing costs. And then there are also nonprofit agencies or private donor organizations, as well as bank and lender programs that offer down payment assistance as well. So final remarks, have your finances and credit in order. It's important to save as much possible for your down payment and closing costs and other expenses such as moving, establishing utilities, and any purchases to be made after closing. It is very important to know your budget and what you can comfortably afford. Typically, when I'm meeting with a customer, the main thing I focus on is, if you're renting now, is that a comfortable payment for you? And then we kind of are able to adjust the loan and the pre-qualification amount around that. Also, shop around for other lenders, rates, agents, and all the services related to the home buying process. A lot of different companies offer different programs, so it's important to have an overall idea of what you're able to do. And ask for referrals to help in the process. Working with your lender and your agent, they're in this all the time. So they have a bunch of different resources that you're able to utilize to make sure that you are getting the best deal possible and that the property that you're purchasing is to your standard. And so that's all I have for you.
Excuse me, Brandon, I have a question for you. So
Yes.
He disappeared. Marsha. I know she's been having computer issues. But before she gets back on, Brandon, I want to say thank you again for the opportunity to provide the presentation. I think it's really important to know, um, how the process works out and then how we can be able to provide the tools and resources to guide you. Valerie, I don't know if Valerie's still on the phone.
Yeah.
We wait on Marsha to get back, but Valerie, is there any kind of comments that you would like to add to kind of supplement what Brandon said before we ask for any kind of questions?
No, I think the first step in the home buying process is to go ahead and speak with a lender and get your pre-approval. Then you will know exactly how much you can look for and the type of house. But you can, in the meantime, look at Realtor.com or Zillow or contact your agent and she can send you houses online until you are ready, just so you can get an idea of what houses you like and what features you like. That's about all I have to say.
Absolutely. Thank you, Valerie. And just as a reminder, we're here from the beginning to the end. So you can reach out to one of us well before you even consider getting to the home buying process because we can help provide you the tools, resources, and just some insight to kind of help you better prepare. Buying a home is one of the biggest decisions that you will make in your entire life. And it has such a significant impact because not only does it affect your credit, but it's the roof over your head, right? And so we want to make sure that you're not rushing to the home buying process. We want to make sure that you feel comfortable about the home buying process. And again, our network is really beneficial. We have a lot of years of experience with our realtors. That's what we call our members in our organization. They have a lot of experience to be able to help them out, help you out. And then also too, if you have other people who are watching this later or actually participating now that wants to get more information, please feel free to reach out to us because that's what we're here for, is to provide these resources that has been desperately needed on the Illinois side of the river, and we want to be able to help you out. Marsha, you had a comment before we go to Cora for questions. Marsha froze again. Cora, do you have any questions?
Yeah, I had a question about um, veterans that want to do down payments. We have been told that they don't have to have a down payment. Is that a good thing or not so good? We should have something.
Did you want me to take that?
It could be a good, or it really just depends on how you're looking at it. Because, of course, with a 0% down, then you're paying a higher amount on that monthly payment just because you're financing the full purchase price. So
Right.
if you are looking to have a lower payment and you do have something set aside for that down payment that you're willing to use, of course, that'll lower your monthly payment. But if you're,
Okay.
kind of wanting to save your reserves and take advantage of the 100% financing, that's, a
Okay.
huge plus. So.
Thank you.
It
I
really just
appreciate
depends on your personal
it. Yeah,
situation.
you helped me out. Thank you.
So, Brandon, I'm sorry. I better hurry up before my internet fails me again. Can you all hear me okay? Okay.
Yes.
So, what happens when you have not provided, a person has not provided authorization for a creditor to pull an in?
Oh no.
Oh, goodness.
Mid question.
Man, that was going to be a
Big
good question
question.
I'm
too.
a call.
It
Man.
was.
She got frozen again.
I'm gonna
Got
call her and ask her
frozen
what the
again.
question is.
Yeah, I'm gonna text her.
Yeah,
So,
we
Cora,
want
I'm
the
taking
question.
it that you are a veteran, correct?
My husband
Hi,
is.
Marcia. Hi, Marcia. We lost you. What is the question?
So, the question is, if you do not provide authorization for a creditor to pull your credit, and there are numerous inquiries from that creditor, and you have not provided authorization, what happens if you have all of those credit inquiries on your report? I know that it can pull your credit score down a little bit. So, how do you
Mhm.
handle that? And you have not provided authorization for that company to pull your credit?
Typically, an authorization is required, even if it's a verbal authorization. I personally haven't dealt with anyone that's had their credit pulled without that authorization, but you should. I'm not sure if they're able to
Yes.
Hey,
submit a
Brandon.
dispute for that. Yes.
Yeah, Brandon,
Yes.
I'll speak in here. This is Dave Toby. Yes, you can submit. You would have to contact the credit bureau that is reporting that that creditor had pulled credit, and then you would have to dispute that through the credit bureau.
Okay. I know that that's a major issue. And I've even had that on my credit report, and I did not authorize it. And I had disputed it. I just wanted you to kind of talk about that because that happens a lot. It's like I did not provide authorization for them to pull my or review my credit, but it's an inquiry and it's not as hard as a hard pull, but it still can affect your credit score.
Yep, it definitely can. And unfortunately, what you have to do is work through either the credit bureau or you have to contact the creditor that pulled your credit and dispute it with them. If you contact the creditor, then, and I don't know this number of days off the top of my head, but they have a certain number of days to get back with you. And if they don't, then they have to remove it.
And I believe it's 30 days, Dave. I believe it's 30. Yes.
Yeah, I'm not positive of that, but I do know there's a certain number of days and then you'd have to remove it.
And people should be aware of that because a lot of times people do not realize that they can resolve that issue and they can change that entire scenario of their credit report, kind of dinging it a little bit. So people really need to be aware of that. Yep.
That's very true.
Okay, thank you. I'm sorry about this internet issue that I'm having. Okay, that's all I had.
Okay.
Well, I want to say, Cora, thank you to your husband for his service to the military as a spouse of someone that served. I know that's a lot of responsibility and heavy lifting on your end as well. So we want to thank you for your service as well. We're very supportive of our veterans in the area. And yeah, I think that was a good question. So again, if you know anybody in your network or anybody that tell Desiree, thank you for letting you know about our workshop. But if there's any way that we can, yes, absolutely. And if any way that we can be of assistance of you or for you, please feel free to reach out to us, and we'll be here to help you out. Do you have any other questions, ma'am? Yeah, no problem.
No, that's all I have for now. Thank you.
All right. Well, everybody, thank you again for taking part of our first big webinar, right? So we're again going to be consistent in making sure that we provide webinars and programming to give people an opportunity to get information that they can use, take back to the communities or to use for themselves. On behalf of the Metro East Realtors Collective, I'd like to thank you for participating and watching this at your own time as it will be on YouTube. Brandon, thank you for taking the time for doing a webinar, as well as FCB Banks not only being a sponsor, but actually being part of the action that's needed in our community. So thank you again, everybody. I hope that you have a great rest of the week.
How will I find it on YouTube to tell people?
You know, that's a great question. I need to get your information. I need to get your information, the registration link. But what I can do is once I get this converted to YouTube in a couple of days, then I'll make sure that we can get that passed to our networks.
That'd be great. Because I
Yes,
do have
ma'am.
a couple of people I want to send it to.
Well, we'll be here waiting for them.
All righty. Thank
Hey,
you.
And if
Dr.
you get,
T,
and,
I'm
yes,
sorry,
ma'am.
Dr. T, I have her information for you. So I have it.
Okay, cool. Okay,
And
awesome.
hey, Dr. T, I got one quick thing to add to what Brandon, when Cora asked about putting
Yeah.
down payment. The other benefit for a VA, if you do have funds saved, putting the down payment in, is it does reduce the funding fee. So if you do put down payment, there could be a reduced funding fee. So that is another benefit to putting money down.
Thank you. It's good to know.
Absolutely. And Cora, like I said, we're actually having a networking event tomorrow at the Events at the U, or the U Gaming Bar, located in the west end of Belleville. It's open to the public. And so if you have the opportunity, tell you and your colleagues to come and visit us. We'll be here. You'll have a chance to meet us in person. And also we're collecting water on behalf of the citizens in Cahokia for the water and sewage crisis that they're experiencing. So we're not only about, the business end of it, but we're also about serving our community. So if you do come up, just bring a case of water and it'll be greatly appreciated.
I think that was listed on the email.
All right.
Yeah.
Appreciate
Yeah,
it.
it was.
Thank
We'll
you.
do that. We'll do that.
Yes,
Okay,
ma'am.
I'll see you tomorrow.
Yes, ma'am. All right. Y'all have a great
Thank
rest of the
you.
day.
You too.
Thank
Yep.
you.
Bye-bye.
Thank you.
Thank you.